Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency whilst drinking a cup of delicious coffee. Now in today's episode, we're talking about Bitcoin and Bitcoin's price. No surprise, Cardano, Celsius Network, Chainlink, and of course, our usual 404 Logic Not Found segment. But before we get into all of that, let's kick it off with questions from the community, from YouTube and Twitter. So I'm going to pull those up here on the computer now. If you want one of your questions answered, of course, please do leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit the bell notification button so you can get a heads up whenever I post new stuff here on the channel as well. Thank you for that. So let's dive into these questions. Now the first question is from Kevron Creates. Does a hardware wallet work similarly to a YubiKey? Now, if you're not familiar, this is a YubiKey. It is one of the best purchases one could ever make. I'll leave a link down below. But a YubiKey basically is a mini computer chip, really, if you think about it, a credentialing system. You can plug it into your device and generates one-time passwords. It can sign with keys, etc. So in many ways, yes, a hardware wallet for cryptocurrency is very similar to a YubiKey in that it is a credential management tool underneath sort of all the different layers. Now, one way that I guess a hardware wallet differs from a YubiKey is that hardware wallets need to do a more wide variety of different protocol operations. And so they need to have a little bit more complex firmware. And then also user inputs can't be delegated to a device. So a lot of the user inputs that you have to have on a hardware wallet for seed phrases, for managing wallets, for initiating transactions, and all those things have to be more complex. So you have to have computing units inside those things, inside the actual hardware wallet. So they're similar underneath the hood in terms of the sort of secure element technology, but ultimately they start to divert as you get to how they're used and functionally how they interact with the devices that they're connected to. With your hardware wallet, you connect it to your computer via USB or you connect it via Bluetooth, what have you. These devices here you can connect via different protocols, NFC, through USB, USB-C, etc. So they're similar there. But of course, there are some functional differences. But that's a great point, Kevron, and thank you for your question. Now, the second question is from Neil Patel. What about the ERC 677 standard? And this is probably in response to last week's episode about ERC standards. Isn't that near-term and possibly long-term an advantage for Chainlink since it reduces costs? So let me explain what ERC 677 is. It's basically an ERC token standard that stems from ERC 20, the fungible token standard. And it provides a way for you to do something called transfer and call. So essentially you can transfer an ERC 20 token and call a function in a smart contract, the receiving smart contract, at the same time. So basically operations that once would say, for example, when you receive ERC 20s, then send someone this token back or trigger this operation. Those can be done now in one transaction instead of two. So this does save gas costs. In most cases, there are some fringe cases where it might not, but it also allows you to start batching things better and it's a better user experience. So yes, it's an advantage for Chainlink because they have implemented this sort of from the get-go. They went quickly from an ERC 20 to an ERC 677 type standard for that very reason. So yes, it's a great thing, but Chainlink is not the only company or the only project that can use this standard. And I would say most projects that could benefit from it could very easily, or with a relatively moderate amount of effort, could migrate their existing token to this standard. So I don't know if it's necessarily a long-term advantage for Chainlink unilaterally, but it's definitely something that they were smart to take advantage of early. So yeah, thanks for your question, Neil. Senor Chunk, really cool name actually. Best crypto chat on YouTube. Thank you very much. Any other good suggestions? So I wanted to take this time really quickly to shout out a couple of folks. Digital Asset News, great channel. You can check that out. Kaizen Crypto, if you're into Cardano, you're just into nice people. This is one of the nicest people you'll ever meet. Runs a stake pool on the network, so you start to get some variability in content. Great channel. Elio Trades, Elliot from Elio Trades, pretty interesting place if you're interested in learning about trading, which is something I don't really do on the channel all that much. Sometimes I do. That's a great place to go. There are tons of great channels out there, but those are just a few that I've been watching lately. Thank you so much for your question, Senor Chunk, and for watching my stuff. Awesome. Anthony Clerget, I hope that I pronounced your name correctly. Great work. Thank you so much. Do you think we can still run a Link node on a Raspberry Pi? So basically this question is, do you think you can become sort of a Chainlink node operator with a really weak piece of computing resource, right? A Raspberry Pi, something that doesn't have a lot of compute resources. And my answer is maybe. I have a feeling that you'll still be able to run the software on that without running into too many issues. I think as you get to these more intensive data processing jobs, right, where it's not as simple as going to an API, pulling the data down, doing a really basic formatting job on it, and then sending it back. Once you get out of that realm, I think you're going to have a tough time, right? So when you get to things like verifiable randomness, when you get to really large data jobs with a really intensive processing requirement, that's going to be really tough. And so I think your computing resources are going to be dependent on what type of data that you're providing, what type of jobs you're providing, and also what your uptime is going to be, how often people are going to reach to you for requests. I think you need more powerful hardware the more requests you're going to serve. So yes, it's possible, but the biggest ones that serve the most requests, probably not. All right, I'm only going to bet this is Chino4422. Nice video once again. Thank you so much. What's the best way to track the past purchase price of your crypto? Etherscan only shows the current price, but not the previously purchased price. Now, this kind of leads me into a quick story, but I had the same issue. Early on, when I was starting to, really keep track of crypto, right, and I was trying to keep track of it, it was easier because there weren't as many coins, right? In the early days, right, you had a few. You had Ether, Litecoin, Bitcoin, Doge. You just had a few to keep track of. But as time has gone on, there's more and more to work with. There's more and more to keep track of. And I was going on to these Etherscan websites or whatever, like data websites. And I was going back to that date and time of my trade and looking at the price and keeping it in an Excel sheet. Extremely painful. The more crypto that you do, the more trades that you do, it's a nightmare. So what I started doing is I just spent the money and I got Coin Tracker. Best decision I ever made. I know I've talked about this in other videos, but this question really harkens back to that. Cointracker.io, it's great for crypto taxes. It's great for tracking your portfolio. Now I have a sort of one-stop shop where I can look at everything I hold across all my wallets and across all the exchanges that I've used. I can see where I have tax loss harvesting opportunities. I can see where I'm in the black. I can see where I'm in the red. I can see all these different things. And it keeps track of all those cost basis points where I've gotten into something. And so it's so useful. It's one of the most useful tools that I've purchased, worth every penny. So I'll leave a link for that down below as well if you're interested. But definitely move away from the manual things. It's too prone to mistakes. It takes too long. If you can afford it within your budget, I would say get a tool to do it. So thank you so much for your question. And that is going to do it for the questions today. Now that said, for those of you who are new here, every single week in partnership with the folks at Cobo who make that awesome Cobo Vault hardware wallet, I am giving away a Cobo Tablet Plus Steel Seed Phrase backup in every episode from here on out. So if you tune in on Fridays, you can enter to win. And all you have to do to enter is just to comment on this video, and I will pick a random winner from the comments every single week. Now, just for transparency, the product is only available in the US, Canada, and Europe. So if you win and you're from another region, I'll just send you some Bitcoin instead and make you whole. So the winner of last week's giveaway is, here on the screen, random draw. So big congratulations. And of course, I will be in touch to talk about your prize. Now, it would not be a Crypto Over Coffee episode without a healthy dose of Bitcoin to kick off the news. So that's where we're headed first. And this week has yet again been largely good for Bitcoin's price. We're still hovering at that 13.5K mark. And of course, the bulls on Twitter are screaming for 20K right around the corner. Wishful thinking, but okay. I do want to present one small challenge in that bullish preconception, I guess you could call it, that I see Bitcoin facing in terms of reaching that all-time high or even a yearly high. And that would be the stock market. Now, the rhetoric from Bitcoin maximalists and bulls online would lead you to believe that Bitcoin thrives when all traditional markets are dying. That is simply just not a fair generalization. And if you look at this week even, the price moved negatively when banks and analysts predicted an impending stock market bloodbath. I would love to be wrong on this, but when you see the stock market day of reckoning coming, Bitcoin is likely going to move down with it, if not at least in the short term. So please don't be that person who is overextended when that happens. Be safe, be risk conscious, be risk aware. And for me, I would imagine that the election will be one of the big catalysts for the stock market movement one way or the other. So if Bitcoin can hold strong up to that date and then brave the storm, only then would I feel really, really bullish going forward. And the truth is, the economic world around us is a big driver for Bitcoin price, but mining activity and hash rate is also a huge thing. And I'm optimistic looking at the trends for hash rate because it seems that overall it's stable and it's growing post-halving, if you look at the overall trend, which is similar to years past. And of course, this week with the big high price rally, hash rates did drop and fees started to rise, which is usually the type of push and pull that we start to see during these periods of price expansion. Now remember, when markets are hot, it will cost more and more and more to move Bitcoin. So of course, bear that in mind when you are buying and selling. Of course, I hope that we finish out October above 13K, and I hope we hold above 10K well into November, especially through the election. That would be a good sign, in my humble opinion, but of course, I'm no financial analyst. Who knows what's going to happen? Now, moving on, I would like to give a big shout out to one of my favorite VPN services, ExpressVPN, who are in my mind the best premium VPN provider out there. The reason, though, that I'm talking about them today is not due to a sponsorship or anything else, but because they have pulled a really, really good announcement out of the hat, and that is that the ExpressVPN Digital Security Lab is going to be built, which will likely be a collaborative initiative with industry, consumers, and regulators to identify the major areas where digital security can be improved for the masses, and also to create collateral to change consumer behavior to be more secure online. I'm absolutely blown away by this idea. It's not a cheap thing to do because you have to build this structure out and they have to lead. And by making this move, ExpressVPN is showing that they genuinely care about security and privacy and how consumers build better habits protecting themselves on technology. And that being said, if you do not yet use a VPN on your daily browsing or your daily internet use, then I highly recommend you do so, as it's basically a no-brainer layer of protection for your internet use. I will leave a link down below to ExpressVPN if you're interested, which will automatically populate the code Hashoshi to get you the best possible deal on a plan with ExpressVPN if you're interested. But of course, there is zero pressure to buy anything. Now it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, basically I highlight notable tech-related fails or otherwise stupid moves that really just need to get some attention. And speaking of attention, if you want to help this video right here get some attention from the YouTube algorithm gods, please do hit that like button and get subscribed to the channel, because it tells the YouTube robots, the little crawlers that read everything, that you're enjoying the content that you're watching and you want to see more of it. So thank you so much for that in advance. And I would also like to say, before we get into the actual piece of content here, rest in peace to the comments section, because it's about to look like that climax fight scene from the movie 300 in just a second, because today's topic is Ripple. Now, it's well known that Ripple, the company behind various financial products that utilize the XRP cryptocurrency, has a partnership of sorts with MoneyGram, which is a popular payment remittance firm. Now, when this was announced originally, way back when, all the fans of XRP pitched this as the grand vote of support, the grandest vote of support from a big industry player, and that XRP price would skyrocket in response to this news and the renewed usage of XRP. However, if you look at the financial reporting from MoneyGram in the past 2 quarters alone, it shows that this arrangement might be a little bit more lucrative for MoneyGram than it is for Ripple, with MoneyGram getting what looks to be a pretty sweet payout from Ripple for their participation. Now, let's not forget, Ripple invested $50 million in MoneyGram in 2019 as an investment. So it's no surprise that MoneyGram agreed to participate as a liquidity provider for Ripple's on-demand liquidity network that's centered around XRP. No surprise. Now, in quarter 2 of 2020, according to financial statements, MoneyGram was reportedly paid over $15 million for market development fees, which I can only read as payments for providing liquidity to the network. And then again, in Q3, they were paid almost $9 million or $9.3 million in payments for the same line item. Now, all in, if the financial reporting is to be believed, and if it is accurate, that's nearly 75 million bucks all in flowing from Ripple into MoneyGram. And I'm looking at this, wondering where the net benefit is for Ripple, and more importantly, Ripple's investors, both their company and in the XRP token. Did this money paid to MoneyGram come from XRP buyers buying tokens directly or indirectly? There are so many questions that I don't have the answers to that I would love the answers to, because it seems like a sweet deal for MoneyGram, whilst the real stakeholders in what Ripple is building, the token holders, the investors, they seem to be kind of left in the lurch here. And for all the work and money that's been put in and invested and spent on this project, and all the promising products and partnerships that we've seen over the past years in the news, I just see so little to show for it. And if I'm an XRP holder, I'm a little bit irritated right now about the big money being shelled out to a seemingly low impact partnership. And something to me just doesn't add up here. I'm not making any accusations about wrongdoing or fraud or anything like that, but I just don't feel like funds are being allocated in a way that aligns with A, building out a product offering that changes the way the world does business, and B, enriching investors by way of building the product offering. It blows my mind. So 404 logic not found. Moving into the world of Cardano though for a second, we got our first sneak peek at the roadmap for Goguen, the critical protocol updates that will bring smart contracts to the Cardano mainnet. Now, based on this update call that we had this past week, the mainnet rollout of Goguen features will be somewhere around the pipeline of February or March 2021, which to me is no surprise. It seems though that on this timeline, a testnet then will be available in November or December, where critical bug fixing and user testing will help refine that mainnet launch that will come in the first quarter of 2021. Of course, the markets, though, reacted very negatively to the news that we won't see Goguen in 2020. Now, I will admit that the talk at the Shelley event was that Goguen was closer to done than people thought, and the implication was that folks might see it in 2020. There was a lot of hype there, and I can say that there probably was some bad expectation setting there, but let's be real. 2021 is not surprising, nor the end of the world. Ultimately, this is yet another protocol update that Cardano has one chance to get right. If this falls flat, it will spell the end of this network. This rollout has to be clean, it has to be efficient and smooth. And lots of resources are going to have to be invested in bringing on developers to build within the first few months of this so that the transition to products being built on Cardano really seed interest in Cardano as a DeFi hub, as a dApp hub, as a place where people can build products people will use. So this is critical, and it's really important to take the time needed to get it done right. And on that note, there is also a demo out there of the ERC20 token converter tool that will help Ethereum dApp developers migrate their token projects to the Cardano network when Goguen does arrive, which is a great idea to have ready for launch. And this will hopefully incentivize developers struggling with gas fees right now to head on over to Cardano to build their dApp in the future. So we shall see how this all pans out. I will keep you posted. Now, in other news, the popular lending and DeFi platform Celsius announced integration with 35 Chainlink price oracles recently, which is just another well-utilized app that is now using Chainlink's oracles for price feeds these days. Now, the CEO of Celsius, Alex Mashinsky, had this to say about this particular integration. Our partnership with Chainlink is a key driver to the gradual decentralization and increased transparency of the Celsius platform as a whole. Instead of completely overhauling our successful business model, we are able to use Chainlink to decentralize critical pieces of our systems like pricing, monitoring, in-app functions, while retaining the same lucrative benefits afforded to Celsius users, such as weekly rewards and low-cost loans. All in all, this move is to improve transparency, decentralization, and ultimately security of the DeFi products encapsulated in Celsius's product offering. And I would like to see more and more products like Celsius start to do the same thing as Chainlink continues to deliver and bring new features into mainnet like verifiable random functions and things like that. So we're really seeing Chainlink start to get integrated in more and more robust systems. Now, staying in the DeFi space for just a minute, the DeFi lending product development company Aave has announced that their protocol governance is now being turned over to the community by way of the Aave token voting process. Now, this move comes as part of a migration from the original native token Lend to the new token, the Aave token, AAVE, which will be managed and controlled not by the core development team's admin keys, but instead by the community itself. Now, this is a great thing to see in the DeFi space in general, because many projects out there in the DeFi space have core team members or developers that have very powerful and dangerous admin keys, which are, again, dangerous forms of centralization in otherwise so-called decentralized products. Now, conducive with yet another hot market sector, the Aave token will also enable, I guess, a sort of passive income by way of staking, where holders can stake to earn a portion of the network fees for things like flash loans. So it's very exciting. If you are a fan of the project or a holder of Lend, make sure you check out the website to figure out how to facilitate your token swap. Now, I did also want to draw attention to a story that I read this morning about a study done on Ethereum, and more specifically, the percentage of ETH or Ether stored in cold storage or self-custody versus in exchanges. Now, the numbers were rather shocking to me, to say the least. Now, according to the data provided by Viewbase, around 24% of Ether circulating supply was found to be stored on exchanges, which is a massive, massive sum. We're talking billions with a B worth of value. Now, this to me says two things. One, for all the talk about decentralization and decentralized finance and decentralized apps, it seems that a lot of Ether holders don't seem to grasp the concept of cold storage or self-custody and not relying on centralized exchanges, which is really surprising to me. And two, this could be a real issue when Ethereum 2.0 comes to the forefront, because exchanges holding nearly 25% of supply in circulation poses a massive threat to governance on Ethereum 2.0 when staking does arrive. These centralized exchanges could very well become cartels. And listen, I'm not saying that you should panic or that this is a world ender, but I am surprised at this metric if it is to be believed, and something has to be done about it. So if you have Ether on exchanges, get it off. Now it is time for the winners and losers of the week, which of course highlights the biggest winner and the biggest loser in the world of tech this week. The biggest winner has to be MicroStrategy, whose Bitcoin investment earlier this year has already netted nearly $100 million in profits, which outstrips their Q2 earnings from their core business operations. Now that is what I call a positive capital investment. So well done to MicroStrategy yet again. Now, the biggest loser of the week has to be gold bugs, who also tend to be Bitcoin haters, Peter Schiff, who saw Bitcoin reach yearly highs against gold at nearly 7 ounces of gold per Bitcoin. Maybe a sign of the future? Who knows? But people who hold gold are not happy when they're comparing it to Bitcoin. Now, anyways, I want to say thank you for every single moment you spend watching content on the channel and supporting this channel. If you do have time to stick around, though, please do check out this video right here about Cardano's Goguen that I'll link up on the screen. But regardless of that, I wish you and your family a safe and restful weekend. And until next time, cheers.